Hey, welcome to Weekly Tax Update for August 4th, 2023, otherwise known as episode 80. Thanks for joining us for another supersized issue this week. As you know, we've switched to this for 2023, a monthly theme, and during that theme, almost all of the programs will be of a similar theme, a similar topic. So we're just getting into August, which is real estate. AJ Reynolds just did Form 4797 on Thursday, I think, and we're going to just hit the ground running. There's 30 credits this month, all on real estate. Fabulous group of speakers. If you're not a subscriber, you should be. September and October will both be representation themed. I already have a fabulous lineup of folks you've heard of, and we'll be getting you more details probably next week. November is getting the office ready, where the topics are all geared towards practice management and other tax-related issues that you need as we start the 2024 tax season. Tax Practice Pro has a tax practice support program, which is primarily myself and Ellie Jones, once a week, Fridays, all year round for 90 minutes. On Wednesday nights, we add 2 more hours during tax season Wednesday nights, and that features Rita Ryan, Mark Dombrowski, Susan Anderson, Jessica Smith as the topics and the need warrant. The idea here is if you are a sole practitioner with nobody out there to assist you, or maybe you have an office staffer, you don't have another tax pro, you don't have another experienced tax pro, trust me, talking to us and getting research done is better than putting questions on social media. We do have 1 seat available in this cohort, so please, if you'd like to subscribe, go to taxpracticepro.com and click on the link on the landing page for the tax office support project. We mentioned next month is real estate, or this month is real estate. Listing here are the programs I won't read for you, but AJ Reynolds, Kathy Morgan, Mark Dombrowski, Amy Wall Street is going to be Amy Main Street this month. Brian Coddington will come in all things 3115 and the associated changes related to that form. And Brian also comes back with cost segregation, why it's important for practitioners such as ourselves. And I even get to do a class this month. I love it when Tax Practice Pro invites me back to do a class. This is the last week that I will pop up on IRS Nationwide forums. National Harbors next week. San Diego is in fact full, and Orlando is the end of the month, your last chance if you want to get to the IRS National Forums. Frank Agostino continues his 2023 Tax Controversy Seminar Series this Tuesday night, August 8th, 6 p.m. to 9 p.m. Register and watch it here. 3 IRS CE, 3 NASBA CPE offered by Tax Practice Pro. If you're an attorney in New York or New Jersey, Frank's office will award you with MCLE from those particular states. If you don't want to watch online, you can get to Hackensack. Come on in. There's room for about 100 people in the room. Get there a little before 6. There's free pizza too. So all courtesy of Frank. So great programs. Hope you can make it. We are hoping to have final approval for the AFTR program this week. And once that's done, we will release our self-study. So you'll be able to do the reading and then take the exam right away if you want. The development of the webinar series for the fall is almost done. There's a possibility I'm going to do a live session as well this fall. We'll keep you posted on those things. Speaking of live sessions, the International Tax Conference is back in New York City for our 10th annual program. It will be October 31st, November 1st, November 2nd. Registration is open. Go again, taxpracticepro.com. Look for the International Tax Course. So IRS operations, in the last couple of weeks, the COVID title disappeared. The website is now IRS Operations. We have updated numbers released July 28th through Saturday, July 22nd. So numbers are about 10 days old. It's the best we're going to get from them right now. Used to be almost concurrent. We got them on Friday through the day before. So 2.15 million unprocessed individual returns. That's down 190,000 over last week. There are 1.6 million returns in error correction. There's no change to that number. Now, I'm not clear if that means as they blow through the paper returns, they have so many new error corrections that it's equaling out the error corrections that are being cleared. Not really clear there, but they have 548,000 paper returns needing review right now. That's down 480,000 in the last 2 weeks. So I really think there's this big push to get rid of the paper and get as caught up as they can as they come into the fall extension season. Now, there's 1.27 million unprocessed Forms 1040X. That's down. That's as of July 15th. That's a little bit further behind on the release of the numbers. But that's down only 20,000 returns in a week. And they're still taking more than 20 weeks to process, although we've had a couple of simple ones with adding a W-2. 10 days later, they have the refund. So it's not clear what I think if it can be automated and released, it is. And there's just other things that require more review and are taking longer to be released. This is the last week I'm going to talk about Form 941 numbers. I was thinking that I don't know what that really does. It just shows us that starting at the end of the quarter, the numbers go up, they start processing, and the numbers go down. I don't see the value there. But the 941X number will continue. 506,000 Forms 941X in inventory as of July 19th, 2023, up 18,000 over last week. Something to keep in mind that that we noticed is that based on the number they're clearing per week, we think everything submitted before May 1st has been processed. And they're only 90 days behind on inventory. Nothing official. That's just reading between the tea leaves, as they say. Now, Commissioner Warfel told the House Ways and Means Committee that he was processing 20,000 return 941X during tax season, and they would be able to increase that to 40,000 after tax season. Almost every week, they've moved more than 40,000 down. So in addition to all the new stuff coming in, at Christmas time, they were close to 1 million 941X in inventory. So they have been pushing these out, pushing them through. They're doing a good job here, at least with the processing part. ITIN updated and tells us that they are processing items submitted during May. And again, we've said this is probably the closest to caught up that unit ever gets, is a month, 6 weeks behind on processing. So, surprise, developers of tax software that sell to retail are opposing the IRS Free File program, and their lobbyists are starting to have conversations in D.C. So H&R Block and Intuit are specifically mentioned in the media, but I am sure all of the larger players that have a direct-to-consumer model, or at least partial model, are having this same discussion. They're opposed to Free File, or at least the IRS version. Now, remember that over the last couple of years, most of the participants in the industry Free File that's been around for 30 years have left the program because the ProPublica and some other reporting discovered that definitely H&R Block and Intuit were blocking the internet search engines from finding the free landing page. So if you typed in H&R Block free, you never got to that page. If you went to the IRS website, chose Free File, and selected your company you wanted to work with, you got there. But you couldn't type into Google H&R Block free. And maybe that's not so nice. And there was a bit of a disagreement over that. And you've seen, again, the biggest companies back out of this. Now, the Inflation Reduction Act had allocated $15 million to the IRS to investigate a potential agency-administered free electronic tax filing system. And they had to get that report out this year. Now, everybody thought that means, okay, they're going to spend $15 million doing some surveying, some touch with all the stakeholders, find out what it's about, what are some of the estimates for the cost, how long will it take to deploy. Well, they did all that, and they also said, oh yeah, and we're going to do the pilot. We're ready to go. So they say this is going to come out in January. It's going to be super interesting to see the results of this. So after that report was released, the IRS started designing it. Not surprisingly, many Republicans are opposed to the free file system. They state publicly potential privacy issues and excess government intrusion. Well, we already e-filed the returns with the government. They already get all the data in my return anyway. I'm not clear what excessive intrusion there is there, but this is what's being said. Now, Commissioner Werfel, despite the lobbying, has said, no, we are doing the test. We are going forward. Good for him. New York State has announced that beginning in 2024, New York State will raise minimum wage to $16, the lower end of the state, New York City, Long Island, and Westchester County, which are more than half the state's population, and $15 elsewhere in the state. So we just came out of a 6 or 8 year run where we went from a little over $10 to December 31st, 2022, we went to $14.20 for general minimum wage, $15 for food service minimum wage. Now, to be honest with you, around here, I'm 60 miles north of New York City. I am above Westchester County. It's $16.75, $17 an hour now to go get a food service job. So in 2025 and 2026, we're going to see 50% increases. That's almost 5%. But then starting in 2027, this might be what's disturbing. New York State is going to tie minimum wage to an annual increase tied to the Consumer Price Index. Consumer Price Index ran average, it was 10% earlier in the year. Average is out right now to about 6% for the year. So that would mean on $16, that would mean a $9.60 raise. I'm sorry, that would be terrible, wouldn't it? That would be a raise, though, of 96 cents. And that's going to start to add up that we're going to see $1 a year or so or more increase in minimum wage. Does that become a driver then of everything? And then what does that do to union contracts and things as they renew? So I'm a bit scared about what they're going to do here. What's this going to do to inflation? I only have a minor in economics, and that's a long time ago, so I don't know. I'm not going to pretend to understand. But what does this also do to other states? Certainly our neighboring states, New Jersey, Connecticut, Pennsylvania, may need to look at their minimum wage and what they're doing to remain competitive. Now, federal student loans resume in October. We've had a 30-month reprieve, pause, due to the pandemic. And these were things the federal government could do. What's the easiest way to help people? Leave money in their pocket. Don't take it. So he said you don't have to pay. I talk to people all the time who have never made a student loan payment, right? They graduated in the last 3 years. They got a 6-month deferral anyway. They haven't started making payments. And you talk to some people and they're like, I don't know where I'm going to come up with that $400 from. And I just chalked it up to, wow, bad planning. You shouldn't have bought that car or made some of your financial decisions. But then there was a piece in Bloomberg this week anyway, in Bloomberg, folks feel unfairly burdened right now by student loans because they've seen corporate bailouts during the pandemic, and they're calling on representatives to provide some sort of help in the face of economic struggles. I don't know. You listen to Chase and Citibank; they tell us the economy is doing great. We're not going to slip into recession this year. There are growing frustrations though on social media, especially since the Supreme Court struck down President Biden's loan forgiveness plan. You'll remember he wanted to forgive originally $50,000. That was on his platform when he ran for president. That got slimmed down to $10,000 unless you received other financial aid, and then it was going to be $20,000. And we've shown slides in the past that $50,000 was like a huge percentage of the population, but even $20,000 is like half the people out there with a student loan owe $20,000 or less. So you could argue good or bad, but it really was going to help folks. So there may be a movement starting out there for people to ignore payments as a form of protest. Now, if anyone asked me about that, normally my immediate response would have been, what about your credit? Enter the Biden administration. Student Loan Leniency Program. So there's a 1-year leniency program from October 1st of 23 to September 30th of 24. Interesting, October is when the 30 months are up that we have to start collecting student loan payments. October to September is also a federal budget year. So very interesting how the dates fall together here. Program aims to protect borrowers' credits and ease financial strain. So the key features are you don't make payments in this period, it won't be counted against you, won't affect your credit, you're not delinquent. You won't be referred to outside collection agencies. It's designed to shield borrowers from the harshest financial consequences. Well, the harshest financial consequences are the driver to get people to repay. This allows borrowers to potentially prioritize other debts and expenses without immediate harm to credit scores. Interesting. Of course, the interest keeps going on top of that, and your 30 years to pay this back just get pushed off further and further. Our friends at Mastercard are banning cannabis purchases. Now, as you know, marijuana is federally illegal. It is state legal in almost every 47 states have some level of legal medical, recreational, or CBD, right? In fact, CBD and hemp were made completely legal at the federal level by the 2018 Farm Bill. 2018 Farm Bill also pretty much permanently enjoined the Department of Justice from using its budget to go after marijuana growers and dispensaries that are in full compliance, that have a state license and are in full compliance with the law. So we've seen a little bit more banking, a little bit more credit card processing. So Mastercard has been processing debit cards across their platforms, their member banks. So despite some states making it legal, it remains federally illegal, which influences most federally chartered and federally regulated banks. We know plenty of state chartered banks, state chartered credit unions. They'll open an account all the time because they don't fear the federal government. But even some of our payroll processors wouldn't touch a cannabis company. Gusto will touch a cannabis company. You just need to disclose it. So things have gotten better, but now maybe a step backwards. So Mastercard's spokesman has said the company's policies dictate the action due to the federal government stance on cannabis sales. Hello, that's been a while, so I still don't understand why the backpedal. The company has emphasized these transactions are not permitted on their systems. Now, remember that all of these folks used to be that MasterCard and Visa were owned by the banks. They then became public companies. But the banks, under an agreement, under a license, can issue Visa and MasterCard cards, and those cards then go on that platform. So they do have this level of control for MasterCard to say, do what you want. You're not going to run it through a MasterCard platform. So legislative impact. We've had the Safe Banking Act pop up a couple of times now. Right now, Chuck Schumer is the biggest driver behind it. And the idea of the Safe Banking Act, we've discussed it here before. I won't discuss it deeply again. But basically, the Safe Banking Act is going to say, regardless of any other law, the federal government will allow marijuana companies in full state compliance, full compliance with state law, to have access to banking, insurance, and other financial services. A very important step. John Corn referred to Senator Schumer's plan to pass as wishful thinking. We use the Frank Agostino method of asking another AI to check what the first AI created. It's very cool to do this. So when I ask it, part of my instructions are, assuming my audience are tax professionals with a focus and interest on the effect of this article on personal taxation, please help me summarize the text into PowerPoint slides. So you saw the couple of slides that Mr. GPT did for me. So here's the best one. The title of the slide Mr. GPT gave me was Potential Impact on Personal Taxation. But he also gave me a note, which I've never seen him give me on a slide, other than at the end, it tells you, oh, by the way, you know, I'm stuck in 2021 or 2022, so you can't rely on me for anything that might have happened after that. And Mr. GPT said, there could be, here are some potential impacts. You need to do more research, but here are some impacts. Decrease in declared income from cannabis businesses, increase in cash transactions leading to less traceable revenue, potential difficulties for tax professionals in managing the accounts. So I think this is great that Mr. GPT is worried about all of us. All right. So I'm giving you a quick refresher here on crypto, and I'll tell you why in a minute. So you'll recall that Internal Revenue Code Section 61, little a, says that everything is taxable unless there's an exception. So the IRS has said that crypto rewards, right, what the coin that you get paid for proving a transaction, right, what Bitcoin miners do. Upon receipt of that coin, whether you sell it or not, it's income. And this goes back to IRS Notice 2014-21, one of the first pieces of ruling the IRS gave us, the first pieces of guidance. So there's been a lawsuit going on in the U.S. District Court for the Middle District of Tennessee for Joshua Jarrett. He sued the United States over a refund claim. So he files his return for 2019 and reports the rewards he received for the Tezos coin, XTZ, for doing staking. Staking is also proof of work. In other words, he's the guy that his computer checked the transaction. Yes, in fact, John's transfer to Nicole, in fact, is all that's legit. And they pay him some fraction of a Tezos coin. He reported that as income, and then he amended the return and said, yeah, I followed your guidance, but I think it's wrong. In fact, I shouldn't pay tax on it until I sell it. And first, there's a third party here, the Proof of Stake Alliance, whoever that is, that's funding the lawsuit. Now, their argument was the creation of tokens is like baking a cake. I take a whole bunch of ingredients and I produce a cake. I don't have to pay tax on the cake I created. I pay tax on the cake I sell. So their argument here is I shouldn't have to pay on what I created, that coin, the reward. I shouldn't have to pay tax on it until I sell it. And the joke here, of course, is that they used cake as the analogy. Instead of miners, Tezos proof of stake people are called bakers. So it's kind of funny. So as part of this, the Department of Justice, which is, you can file a refund claim if the IRS ignores you, and they ignored them long enough, so they filed suit. And rather than taking them to tax court, because tax court is a court of law and not a court of equity. So they take the suit here, and as part of the suit, the Department of Justice, who doesn't want this suit to go forward, says, you know what? We'll give you the refund plus interest. And of course, these folks said, no, thank you. Well, in summary judgment along the way, case gets thrown out, which was good for the government, bad for Mr. Jarrett. So why am I telling you this? Well, the government has now come out with guidance in writing that crypto staking is in fact income reportable in the year of receipt of the coin. And this is coming out in Revenue Ruling 2023-14. As you might recall, Revenue Ruling doesn't have effect until it's published in the Federal Register. It will be published on the Internal Revenue Bulletin. Will be published on August 14th, 2023. Clearly, and there's a copy of this in the handouts. Did we make the handouts available? We did. So this will apply in the year that you gain control over the reward. You have dominion and control, therefore it's yours. I could spend it. I could take it. It's income. The fair market value of the reward is determined at the date and time I get control. And this applies to individual staking and those done through an exchange. It's income. I'm going to report it. Lucky me. Okay. Cryptocurrency broker tax reporting. This is interesting too, right? We've had a delay on the issuing of 1099s for the sales. Elizabeth Warren has been a big pusher on these issues related to digital reporting of digital assets. And if you remember, there's a Form 1099 DA that's supposed to come out, and there is no draft of it. All the 2023 drafts are out. Can't find that thing anywhere, and trust me, I'm looking for it. And I have a Google search set up for it, and I have a search set up in my subscription services. No talk of this. So the Infrastructure Investment and Jobs Act, the Infrastructure Act of 2021 directed Treasury and the IRS to implement new rules, mandate third-party reporting, sales, gains, losses. The rules were supposed to be enforced for the 2024 filing season for 2023 returns. But none of the regulations have come out. So the IRS has postponed the January 1st implementation. One estimate puts it at $1.5 billion in revenue if Treasury doesn't get this reporting out there. That's part of the tax gap. So let's go back to Elizabeth Warren. The Digital Asset Anti-Money Laundering Act is a bill that she's proposed in the past. It didn't get any traction, didn't get voted on. So she's reintroduced it in the Senate. And it has a number of different things here. Basically, all money laundering type regulation. I gave you the full slides with all the details in case you want to read it. It hasn't passed. I don't know what's going to happen. It's important to see Bank Secrecy Act, especially the Know Your Customer requirements, are going to fall over wallet providers. So it's going to become, they're going to get your ID and make sure it's you before you can open up any accounts online. Kind of takes away the anonymity. This is especially true of unhosted wallets. FinCEN has to issue guidance to all the financial institutions. Again, anti-money laundering. They want to strengthen the anti-money laundering compliance. Think about auditing. They want to extend the rules regarding foreign bank account reports to include digital assets. So they're going to clearly say that your FBAR report must include digital assets. So this is going to put more onus on us to say to anyone that says yes to the digital asset question, are any of those digital assets outside the United States? And especially if you don't know where they are, you may have to treat it as being outside the United States and report some set of details. At a minimum, I expect there'll be another checkbox on the friggin' return. We already asked, is there a foreign account? Do you have crypto? Now we're going to ask, is any of the crypto out of the country? Or not, or they'll just change the definition, right? So we'll see what happens here. We now have an IRS Chief Transformation and Strategy Officer. I knew as soon as you funded the IRS at a reasonable level, they were going to build out their bureaucracy. A guy named David Padrino is the Chief Transformation and Strategy Officer. It's a new role. That the funding comes from the Inflation Reduction Act, and he's worked in the government for over 2 decades. Most recently, the federal government. Prior to that, he worked for the state of Colorado. So just a new name out there. One of the things we saw in today's material, IRS plans, I spelled IRS wrong, plans to utilize some of the Inflation Reduction Act funding to improve audits of large, complex partnerships. Now, keep in mind that $80 million got knocked down by over $20 million to a little under 60, and they took away $1.4 billion out of this year's budget. IRS is going to use data analytics and technology tools to hire more experienced accountants. They're looking to do that. Remember, too, they've already built out an analytics and technology team primarily to do work in the crypto space. So I see no reason why they can't share it, right? They've spent all that money. Wasn't it like $50 or $60 million on equipment and people to build that centralized data center? So I'd probably share that. Due to increased businesses organizing as partnerships. Now, this number blew my mind. 600% increase between 2002 and 2019 for partnerships that have both 100 million in assets and 100 partners. Well, let's think about that. That means hedge funds. So they feel the IRS process needs to be strengthened. Audit rate for large partnerships dropped to under 0.5% since 2007. Well, part of that probably is they're auditing. I couldn't find a number, but I can go to the data book at some point. Probably they're auditing the same number of partnerships. There's just 6 times as many, right? So there might have been a 2 or 3% exam rate that has dropped down to this 0.5 number. only because of the increase in the number of partnerships to audit. They've discussed, IRS feels that there are constraints that have been a contributor to the declining rate. Inflation Reduction Act, we said $45.6 billion for enforcement. We took away that $1.4 billion from the 2023 fiscal 23 budget. But the General Accounting Office has made 4 recommendations. Improve audit model design, develop better guidance. Now, it wasn't clear, is that guidance to us or guidance to the revenue agents? I think guidance to the revenue agents. Create measures to track large and complex audits internally. And the GAO report emphasizes refining the models for better identification of non-compliant partnerships. Super interesting. They're going to get better training with the help of the IRA money. And I don't mean they're going to take an early distribution from their retirement account. Again, hiring more experienced tax professionals and auditors. Increase the focus on the high-income individuals. Well, they kind of have to, because they made a promise that the audit rate, the abysmal audit rate on folks under $400,000 of adjusted gross income won't change based on the Inflation Reduction Act money. So we expect that they're going to look at higher income people. Challenges include identifying and hiring skilled professionals. Well, you got to pay. You got to pay what the industry pays, right? You can't continue to make government payment. You want to compete with industry, you're going to have to pay what industry pays. So, and in reacting to the General Accounting Office report, Senate Finance Committee Chairman Ron Wyden of Oregon advocates for the ending of tax breaks available to large partnerships, whatever those are. No one ever asks people like him to make a list, right? I would like to thank Ellie Jones for her assistance on the next couple of slides, because you can't do everything yourself, and Ellie is invaluable at putting some of this research together and doing some of the reading for me when time runs short. These things came out, I think, yesterday, and I said, ooh, can we do this? So TIGTA, Treasury Inspector General for Tax Administration, the folks who audit the IRS. What do they audit? They audit revenue, of course, but they audit systems, procedures, and how well the IRS implements laws and how well they follow the rules. So there were 3 reports this week, one of which we didn't think would be of interest to you, but 2 that we did. So in an audit, TIGTA discovered that taxpayers seeking a visit to the Taxpayer Assistance Centers, the TAX, have different information on the IRS website, the IRS To Go mobile app, and by calling in. No kidding. I've known that for 30 years. The webpage with the most up-to-date information can be buried and not always easy to find. It doesn't always come up with a search on the IRS website. Well, we know the IRS website is terrible to search. Google does a better job. Of course, Google may bring it up, but it may not bring it up as the top item. Information elsewhere can be lacking in up-to-date numbers and up-to-date hours. Information in Spanish is offered inconsistently. Taxpayers need an appointment to be able to see at the TAC, unless there's availability when they arrive on site. Well, I don't know how you otherwise deal with that unless you have IRS employees standing around, right? The TAC for the longest time has been by appointment, and that does kind of make sense, right? No emergencies in tax. All right, so here's the webpage, right, which often leads to inaccurate information. It isn't easily accessible to taxpayers from the homepage. Now, as we've said before, usually it's 5, but TIGTA cites the most damning things that they would think the IRS needs to work at in their recommendations on the report. And because this is like a big corporation, the IRS gets to say, we agree, we disagree. We kind of agree, but let me cover my butt. And in this case, and then of course, TIGTA gets the last word. They get to say something after IRS management replies. So TIGTA said in this case, it's not easy that we agree. We're going to fix that. And I would tell you something we try to do here. Do you ever look at your office from the outside when it was a retail location? Okay, yeah, it needs to paint. The sign isn't straight. How about your website, your phone systems, your emails, right? Same thing. What's going out there? What are people seeing? So you want to take a look at that. Info on taxpayer assistance centers doesn't always appear in searches. Now, I want to defend the IRS for just 1 minute. We had a long time that they were closed due to COVID. So while I'm not defending them, I'm going to add that, nobody's been paying attention. Although you would think that the National Taxpayer Advocate would be on top of this, and they haven't cited them for this. Now, the IRS did not agree in constantly updating phone messages when people call the line. They're saying that would be difficult and take people. Okay. They did agree to ensure that phone numbers for specific taxpayer assistance centers would be updated and checked. All right, so the second TIGTA report we thought was important was IRS internal treatment of sensitive taxpayer information. And this kind of blew my mind. I got an instant message from Ellie. She's like, OMG, did you look at this? So TIGTA conducted on-site studies to ensure the IRS was following its own internal protocols for shipping documents between centers. So some things they don't scan, right? Some things they fax from centers. And we've known, for example, if you send in a form 9465 for an installment agreement, it doesn't process electronically and it doesn't process in the service center. It gets printed out and faxed over to somebody in one of the data entry groups, which could be but might not be in the same service center, right? Special service center specialized. We also know that 941X was only being processed in 2 centers, and the IRS was shipping stuff back and forth to balance it out. So this is going on. It's probably good management, right? You guys are ahead in your work. You guys are behind. There's COVID infection here. We're going to send the work to get it done so that stuff doesn't sit. IRS didn't follow its own protocols. So first, they're required to have a Form 3210 document transmittal with every package. That form lists the total number of documents and includes identifying information for at least 4 documents. So let's think about this. How do I know this big fat stack for an audit or an appeal is correct? Well, I counted it up. It's 100 pages. Here are the 4 most important. That's on my 3210. First thing, if it comes and there's no 3210, you should think there's something wrong. Of course, there's supposed to be 2 copies. One for you, the person receiving, and one that you sign and send back so that I match it up with my copy and know that you got it. Once received, the IRS officer signs off on it, returns it to the sender, email, fax, or mail. If that's not done, the sending employee is supposed to report it as lost. Sometimes if you're talking on the phone with an agent, they'll do something called, they'll tell you they're going to do an internal referral. That's what they're doing. They're reporting that something is missing because they'll tell you, I see where we got it, and I don't see where it's supposed to be. They'll do a referral. Wonder if they put my name down on it as the referring guy. So Form 3210 was not included and not returned to acknowledge receipt. This was in an audit done in August through November of last year. Now, they randomly chose 31 packages in the first test. 8 did not have Form 3210. That's almost 25%, a little more than 25%. 14 of the packages, just about half, had incomplete information. Of the 39 packages they looked at later, 26 did not have the 3210, and 13 had incomplete forms. So that's a 0, right? Yeah. You have to put your name on top to get points. So as a result, there was no way to track whose documents were sent, where they could ultimately be lost. Now, I have to be honest with you. We've gotten letters this year where we sent an amended return or an appeal or some other paper document, and we keep getting this. We need 30 more days. We hope to help you. We need 30 more days, 30 more days. And somewhere about a year and a half into it, we get a letter that says, we were about to help you, and we know you filed. We can't find it. Send us an original copy. And it's like, you've got to be kidding. That's this stuff, right? Now, the IRS has agreed to retrain on Form 3210. Interestingly, 29% of the packages were lost, including a whistleblower case and something redacted in the TIGTA report. So 29% of packages that are sent are lost, and one was a whistleblower case. Not cool. Additionally, the IRS is mandated to complete quarterly audits. Now, this is not a TIGTA audit, right? Now, think of an internal auditor. They're supposed to be checking up themselves. Management is supposed to make sure the work is getting done. You are correct, Donna. That's a high percentage. Now, keep in mind, these are auditors themselves. If you want to look inside that TIGTA report, there'll be a small fine print blurb on the audit methodology. I haven't done tick and tie type audits in a long time, but they're using reasonable methodology on how they're finding stuff, how they're picking it, how they're choosing where the random numbers are coming from, how they're choosing the number of documents to pull out of the universe, and the number of days and time to do it. So these are pretty reasonable audits. Well, it means 29% of this particular sample, Katie, right? So we can go back and read the document together. But I believe they mean of this sample. Still. All right. So the audits haven't been occurring, with staff claiming they were unaware of the requirement. So nobody at the entire Internal Revenue Service was aware they're supposed to use the form and they're supposed to audit. Not good. IRS is going to send periodic reminders about quarterly reviews. IRS is supposed to offer identity protection and monitoring to taxpayers whose information is lost. Oh, they've done that less than 36% of the time. 20% of the time, they can't identify they know they lost it. They don't know whose package it was. And remember, like if you send stuff, my software redacts social security numbers automatically if I don't remember to turn it on, right? A lot of us send replies with a copy of the IRS notice. If you don't include a 2848 because it's already on CAF, you may not have a full social security number on every page. And certainly they've got to keep the one or two. If they lose your cover letter, they may not have a social security number. IRS does not notify businesses whose information may have been breached. Well, that's because they don't need to, right? The 7216 and some of these other rules, Gramm-Leach-Bliley, don't necessarily apply to business. TIGTA recommended the IRS reclassify business ID theft. Currently, it's considered low risk. They also want them to contact businesses and place a data breach indicator on those accounts. IRS agreed it's low risk. They agreed to do it. So, interesting stuff. Okay, so back to my friend Mr. Chat GPT. If you know who Avalara is, Avalara and TaxJar are the two big companies in sales tax research, publishing, and tools. Not so much Thomson Reuters or CCH, but actually Avalara and TaxJar. That's all they do. They do it very well. Avalara has a plugin for Chat GPT. Now, to be fair, I tried to get it and I can't yet. I'm trying to get this and play with it because I want to do a demo of it for everybody because I think it would be really cool. So this is the first tax compliance we are aware of that has a plugin for an AI. The new plugin functions like a sales tax calculator. You can inquire about a rate, calculate the rate for a specific sale, request additional rates. So, and I'm a Chat GPT Plus subscriber, so I should be able to get this. Now, they're saying that OpenAI's guidelines for safe and responsible AI development were followed. And you need to have a Chat GPT account. You don't need an Avalara account to use this. So if you're a GPT subscriber, the 4.0, $20 a month, you should be able to use this tool. I'm really going to try to get it done this weekend and record it. I don't know if I'll post it or if we'll do it live next week or maybe both. But I'm excited to play with this. We do a lot of sales tax research. So this would be phenomenal because we've said before, for right now, the real killer app for our industry is going to be an AI that rides on top of a finite universe of data. CCH or Thomson Reuters putting out an AI that only looks at the subscription you have. Chat GPT plugin that only looks at Avalara's stuff. It's not stuck 2 years in the past in training mode. It's not stuck considering my blog plus a notice that came out from New York State yesterday and weighing the two. It's going to look only at the curated, published data. This is the future. Yes, Cannabis does have an AI enabled for writing emails. I do know that. I was also at a conference last week where people were saying they use AI to respond to the IRS. They cut and paste and put it in. And I said, and you're checking it? Deer in the headlights. The other number one thing I like is the Frank Agostino method. You shouldn't rely on the AI to do your work. If you do, you should be using the AI to check your work, asking the AI, what would be the Internal Revenue Service rebuttal to this answer? And that's neat stuff. And he has, if you don't have it and you need it, he put out a whole bunch of the way to set it up, right? The rules to give it before you give it the material. Leon Hayes of TNEC is a bad example for all of us. Now, by the way, that's Tom Cruise over here, not Leon Hayes. And Mr. Hayes, of course, is innocent until proven guilty. But there's a press release out anyway. He was arrested for $14 million in ERC fraud claims. He's charged with 8 counts of aiding and abetting and assisting in the filing of false returns. From November of 20 to May of 23, he prepared and submitted 1,387 false forms to the IRS claiming ERC. I don't know that I did 1,387 correct forms of anything in that period of time. That's a lot of work. He did not consult his clients. He overstated the number of employees. He overstated the wages. He submitted 3 forms for his own companies. He must have got extra ID numbers. He personally received $1 million in fraudulent claims. Man, if I ripped the government off for $1 million, I wouldn't be ripping them off for you. I would just take my $1 million, go off into the sunset. He charged between 10 and 15% for ERC. The largest provider out there, who is responsible for 75% of the advertising, gets 25%. So he wasn't too greedy. Each filing count carries a maximum penalty of 3 years and $250,000 fine. And of course, he mailed these things. It's the only way to file a 941X. So mail count carries a maximum 20 years and $250,000 fine, or twice the gross gain. So, wow. So that could be a $2 million plus whatever fees he received. All right. We did not do a deep dive into this because there's not a lot out yet. It's based on their press release. The IRS has announced a paperless processing initiative. So, again, using the Inflation Reduction Act money, they want to give taxpayers an option to go paperless by the 2024 tax season. The goal is to be paperless for all returns by the 2025 season. This initiative would reduce up to 200 million pieces of paper that get sent to them and reduce processing times of any paper by half. So the IRS has pressure to modernize. Well, you didn't give them money for 30 years. What do you expect? IRS acknowledges the difficulties in paper-based processes. IRS gets, this is the telling number, 76 million paper tax returns and 125 million pieces of correspondence. Personally, I just want them to put a Form 2553 online, and that alone would be like a large percentage of my work these days. So what are the enhancements going to be? I'm missing a 5 here. By 2024, taxpayers will be able to digitally submit their correspondence, non-tax forms, and responses to notices. Well, that's not such a stretch, right? They've got a portal system up and running. New York and California. California is almost exclusively digital. New York would approve it. So all good, right? The IRS expects over 94% of individuals to no longer need to send mail to the IRS. By 2024, 20 additional tax forms, including amendments to the 940, the 941, and the 941 SSPR will be available for e-file. Yeah, this whole fiasco with ERC taught them that they really need to e-file. I think the next step, too, is going to be that they mandate e-file. By 2025, everything should be digitally processed, right? So they're already using the 940 forms. When they come in, they're scanning them using OCR, and the OCR is converting the file into an e-file. So they're actually e-filing forms from within the building rather than create a whole new system to do this. And that's probably a good idea because they already have an e-file system. Now, I don't know how they're going to do this. Up to 1 billion historical documents are going to be digitized. They didn't say how they're going to do it. I don't know how they're going to do it. That would be awesome. And congressional oversight on these matters. The Republicans have been scrutinizing the $80 billion as part of the debt ceiling. We ended up giving back $20 billion of the $80 billion and $1.4 billion of the 23-24 budget. And I know you're tired of hearing me say that. Secretary Yellen is urging Congress to provide stable and sufficient annual appropriations. Right. Just like the defense budget, right? We said, we don't know how we're spending it yet. We guarantee the defense budget is going up 7% each of the next 2 years. That was in the debt deal. It's insane. They can do that, but they can't do that here. Ron Wyden, again, Democrat of Oregon, called the announcement a huge step forward. Yeah, they said they're going to do it, right? That's a huge step forward. I would say that giving the government the money they need to do this was the huge step forward. So, new thing called InformMe. IRS is developing a mobile application named InformMe, which I have seen twice now, which is why we're going to talk about it here. The app is capable of scanning a variety of IRS forms and documents, and it will give you information from irs.gov. So again, an app whose universe is limited to the place we want you to look. Now, of course, we just talked about the IRS website maybe needing some help and some search functionality, but so this is currently undergoing user testing with IRS industry partners. They have it out at the National Tax Forum. I tested it at Latino and I broke it. We'll talk about that in a minute. So deployment timeline depends. I don't know that they're going to get it out this year. They talked about it. So what have they done? Internally, they showed all these stakeholders. Taxpayer Experience Office is new, comes out of the Taxpayer First Act. Communication and liaison are the folks that your stakeholder people. So it's important they saw it. This is awesome because VITA needs to be able to know it's out there. I think you're going to find VITA. I think you're going to find VITA allowing the assisters to use it. I think that's going to be really cool. All right. Now, external demonstrations, Department of Labor, SBA. Now, why NAEA rates to be on this page and Latino didn't, I don't know. Now, they went and tried this out at the Washington, D.C. Taxpayer Assistance Center. Why? Because all the people working on this are out of offices in the Washington, D.C. area. So this made sense. They sent them over there. Now, on a random, I think it was a Saturday. We had those Saturdays. It was May 13th. So what day of the week was May 13th? If I had done a better job, I would be telling you that. May 13th was a Saturday. All right, my memory did not fail me. So they interviewed 10 people. 90% of the people they spoke to, which for those of you that can't do the math, that's 9 people, spoke English as a second language. They all thought this was very popular with the app. They liked it. Why? You're talking to young people, right? It would have been more beneficial to use the app rather than calling because you would have identified all the issues. Now, they went to Technology Day, internal, don't care. Now, Latino, again, I spoke to it. Now, they had 2 people at the table. One was the IRS employee and one was the contractor. You didn't know who was who until I did something, and then we found out. So they're showing us InformMe, and they're so happy. And if you look, they had 50 people interviewed, 27 respondents, and 96 thought InformMe could work. So if you take 25 over 100, that's 4%. Who do you think the 1% was? I think that was me. So what we did is the guy's explaining it to me, the fellow, this man and woman at the table. Turns out that the woman is the contractor. Other guy is an IRS employee from the technology team. And we're sitting there looking at it. He says, well, what would you like to know about? I said, well, and completely out of the blue, I said, here's where some confusion could come. You guys did a completely excellent FAQ last December on 1099K reporting, and it explained to me everything I needed to do. I had a gain, I had a loss, it was personal, it was a business asset, it was amazing. But then last month, May, you came out with a page that kind of talked about some of the same stuff, but there was no detail. I'm confused. What do I need to do with a 1099K? So I didn't have a notice or a 1099 with me to scan. Now, I'll tell you about something else I saw yesterday. So instead, they typed in, how do I report a 1099K? And here's where the app fails. It brought up Form 1099K and the 1099K instructions, and it proceeded to give me guidance on how to fill it out. Now, I politely explained to the guy, your target audience here is never going to need to fill out the 1099K. They're going to get one in the mail. Of course, the woman next to it's writing down. And then she said to me, you don't have a card with you, do you? I gave her my card. And what's funny is yesterday they had what they call a listening session. They had a whole bunch of different stakeholders on there. I have no idea why I'm on there. I have no idea why I fit into that. I knew one person, Brenda Stewart-Luke, who is with Communications and Liaison in New Jersey, and I know her to say hi. I don't even think she knows my whole name. So how I got on there, I think from the business card. Now, that's where these slides came from, and I have to tell you that what they showed us was something that was far more phenomenal. So they showed us a dummy tax form. You take the phone, you scan it, and it pops up information on responding to the form and what it means. It highlights different things to hyperlink you to other forms. It really appeared to be very, very good and very useful and very helpful. Now, of course, they're presenting that to us, because they want it to work. And I didn't write up the slides, but they talked about three people. And the one gentleman that was the most interesting was a Ukrainian person here on an I-94, right, permission. So he has the authority, he can work. And he has a new baby born here in America, and he needed a social security number. So he wasn't sure. Did he need a social security number? Did he need an ITIN? Is the baby a citizen? All sorts of interesting things. He got one answer when he called. He got another answer on the website. So he came down to the help day to find out what he needed. And of course, they said, well, we'll let you wait in line and talk to an IRS representative, but would you help us out with the app? And he whipped out his cell phone and said, how do we start? And of course, they said, you got to use our cell phone for this. They took him through it. It came up with the correct answer, that the child needed a social security number in order to be eligible for, and then that the child was eligible for the credits because the child's resident in the U.S. with him. And they got in line, and of course, he got the same answer from the person. But they talked about how this doesn't work. So if you're going to be at the tax forum this coming week, by all means, go in there. And I guess they have no travel budget, right? Because again, they're all in D.C. Go in there and ask to see it. All right. So we already know this. I've mentioned it before that there's going to be some negotiating about 1099K limits. $600, $5,000, $20,000. The big holdup, and of course the R&D credit, the immediate expensing of R&D costs, and the 463J, three big issues the Republicans want, which have not been reinstated after the Tax Cut and Job Act. And of course, the belief is to get the Democrats on board. They want that advanced child tax credit again. So we'll see what happens. That right now, Congress is on summer break in August, summer recess. So if you're not a subscriber, by all means, I'd love to have you as a subscriber. If you need the replay of this, I missed the first 20 minutes. I'm going to go re-record it. So everybody have a fabulous weekend. If you need me or need anything, by all means, give me a shout. We're here to help. And have a great weekend.